We gathered a panel of experts on fundamentals. On fundamentals, it's Boris Schlossberg of BK Asset Management. On technicals, Katie Stockton of Fairland Strategies. And on options, it's Kevin Kelly of Kelly Intelligence. Seema?
Let's start with the fundamentals. And Boris, how does Netflix look to you here? Clearly the stock a loser today.
Yeah, I think it looks troubled at this point because the key thing with Netflix, of course, is they did miss their estimates just a little bit. That's not the bad story. The story here is I think the model is getting tired, and I think Wall Street is starting to see it for a couple of reasons. One, saturation of consumers. Two, the increase in prices is clearly having a little bit of a drag. And three, no real blockbuster content. And they're even guiding to the point that they're going to increase their revenue not from additional subscribers, but from additional revenue per member, partly through ads and partly through content sharing, which is frankly, I don't know, going to be how popular that's going to be. So essentially what you have is an untested model. Before, there used to be an all-you-can-eat buffet. Now they're becoming a very selective a la carte pricing model, and it's really untested as to whether that's going to be possible going forward. Additionally to that, they're really seeing, while the rest of the streaming is not really a competition to them, they're definitely seeing a lot of competition from free TV, namely YouTube, and also, of course, TikTok. So going forward, I think it's a big question whether the company is going to trade as much as a growth stock used to be. If it simply starts to trade like a media company on pure free cash flow basis, there's a very serious chance you're going to see price earnings compression, and that means the stock could trade as low as 500 or below. So to me, at this point, it's a pause or a sell.
All right, on the fundamental take, a bit of a soggy outlook. Let's go to the technicals. Katie, how does the chart look right now?
Well, first, I would say it's a long-term uptrend. Netflix has been trending higher since 2022, and it still does have the support of our monthly trend following gauges. That said, of course, today we have a gap down below the 50-day moving average. That is a setback. At the same time, we have an intermediate-term overbought downturn. That means one of our indicators has reversed lower, supporting downside follow-through in the next couple of months. So we would look for this corrective phase to then persist. However, usually after a gap down like this, you'll get a little bit of a rebound. So we're not advocating to our clients that they sell into weakness, rather take that first oversold bounce and perhaps reduce it. I really cannot rule out that 500 level that was just cited, and that's because there is some support down in that area. And yet that 500 level is still actually within the context of that long-term uptrend. So a corrective phase seems in store here over the intermediate term, but to me, it's just a counter trend move within the broader bull market cycle for Netflix.
We'll watch that 500 level. Looking at the option bets, Kevin, what do you see there?
Yeah, what's surprising today is given the significant move to the downside, you're not seeing overly bearish activity. You're actually seeing more calls than puts being traded to 1.2 times. And a lot of those calls are actually near dated and up through the 590 strike. So that's pretty interesting. The other aspect too is you're not seeing vol expand. So post earnings, vols actually collapse. So you're not seeing a lot of uncertainty around the name. Now the stock has moved a lot this year. So this might just be the options market saying, hey, this could be an opportunity to take advantage of the dip in the price today.
All righty. Thank you very much, Kevin. We're gonna now go to sort of the bonus round here, Boris. We want to get some trades ahead of next week's earnings based on your investment schools of thought. So back we go to the fundamentals. Do you have a stock, Boris, that catches your eye from a fundamental standpoint as we head into earnings next week?
Yeah, I absolutely love Meta. I mean, Meta is, I think, the shining star amongst the techs right now. It has a chance to grow revenue at nearly 20% while still trading essentially at around 25 PE. It's using AI very well to serve both the advertisers and the customers right now quite well. Its engagement is up. Ironically enough, I was shocked to find out that, for example, Meta saw its engagement up 3%, YouTube 1%, and TikTok actually saw its engagement down 4%. So that's very positive for them. And ultimately, there's a sort of, I think, an embedded call option in Meta in a sense that maybe TikTok gets banned. It's not a bet I'm making, but it's certainly a possibility. And they would be the absolutely prime beneficiary of that because IG would get all of that flow. So I really love the stock. It's amazing the recovery story they've had, and they probably have far more to go.